The first phase is always Bitcoin outperforming. Next is Ethereum. It's at this point in the cycle when the global liquidity turns higher. And when global liquidity turns higher and you've got a catalyst like the ETH ETF, it'll start picking steam. We saw that last couple of days. It was like, wow, okay, ETH is really trying to outperform. I think it bottomed on the massive ETH wedge chart that I put on Twitter yesterday. And I think it will continue higher over time. And I think ETH massively outperforms Bitcoin for the rest of this cycle. So that's the kind of flow, is Bitcoin, ETH, Solana, with Solana at the top of the pie. Hell yeah, that was a bit of justification after fucking 10 years of fighting. But we got there. And, you know, I've explained it before. How I think of this is in two terms. One is anybody who was an investor in Bitcoin in 2011-12 was like a Series A investor. 2013 cycle, maybe Series B. 2015, 16, Series C. The last cycle, Series D. We've just IPO'd it. And usually when IPOs happen in strong markets like this, it reminds me a lot of the late 90s. And I was trading a lot then. I was at Goldman as well then. And what you found is after the IPO, it would launch and it would be choppy as hell for a while. Sometimes it would sell off quite sharply. Facebook sold off really sharply as people took profits, repositioned. Now, don't forget, a lot of people have front run this ETF. So they're going to want to unwind. And many of those are going to switch to ETH that I've talked about before. They think, rightly so, that ETH is the most likely candidate for the next ETF. And if Bitcoin went up 100% because of this ETF, ETH will go up 300% because it's less liquid, put the same amount of money in. Also, there's a lot of people unwinding the GBTC arbitrage, closing that position, selling out, moving into a different ETF. There's a lot of shenanigans going on. And you can see that with the net flows. There was 4.5 billion or whatever of total flows. The net flows are much smaller, 700 million or so. It's still the biggest ever ETF launches in history as the series, but it's all to play for. And I want you to understand how this works is, okay, all of the pre-orders have now been filled. That was all of these ETF providers going to all of their clients, begging them, you need to do this, you need to do this, you need to do this. Everyone's done that. Sure, there'll be some follow-on next week. A lot of the GBTC guys are unwinding, and that will go, some will wait a few days, see if the market is stronger, whatever. So that goes on for a while. Those of you who are investors in value stocks, commodities, gold, Russell 2000, all of that, you should have a better year this year. Last year was terrible because the business cycle was coming down. The forward-looking stuff already started going up. But really, we should see the economy bottom, start strengthening Q1. After Q2, we start picking up ISM above 50. Everything's looking fine, and your stocks should do well as well. So anyway, hopefully 2024 is a banner macro year. That's how I'm thinking about it. Should be pretty straightforward. Election cycle, more cowbell. They always have to hand out cookies to the kids, the voters, at election time, and this will be no different. Auntie Janet has been obviously offsetting the quantitative tightening by managing the Treasury General account and the issuance. I don't see any reason she will want to tighten conditions just when they fear Donald Trump the most. They will do everything in their power not to let that happen. And to do that, Donald loves to beat people over the stock market and the economy, and they will go in as strong as possible. So expect plenty of goosing to come to try and win your vote. Now, remember, just talking about elections, this ETF, it's going to attract people because the markets have been strong. Last year, crypto, Bitcoin itself was 160%, right? That doesn't go unnoticed, considering even the NASDAQ managed 50%. So it's like 3x the NASDAQ. But let's start with the RAA, the investment advisors and the financial advisors. Those guys aren't on Twitter. They have no idea what any of this is going on. All the drama that played out and the false tweet and all of that shit, that total goat rodeo, I don't know any of this. The first they will hear about this is when they pick up Barron's on Saturday morning with a cup of coffee. And they'll go, oh, Bitcoin ETF. And Barron's will probably have some cynicism in the article, let's assume. And they're like, well, that's interesting, but I'm not sure it's for my clients. And they go about their business, and then they go and see Jack, their big client, on the golf course that weekend. And Jack says, hey, what do you think of the Bitcoin ETF? And the RAA will repeat what he read in Barron's and what he saw on Fox News. He's based in, let's call it Cincinnati, Ohio. And Jack will ask him, and he'll feel a little bit silly. And then maybe next week, He starts reading a few more articles and a few more positive things come out. Then he starts thinking, maybe I should do something about this. And a couple of other clients ask him. And eventually he goes and has his steak dinner with his other friend, Mark, who runs the tire franchise in Cincinnati. And Mark's got tons of money and is a bit racy and likes investments like this. And before you know it, he starts building an order book and getting his clients in. He can see they're interested. He's incentivized by the sales process and the commissions. And before you know it, he's mobilized. It's the same with all the RIAs. This takes time. They're not smiling on, oh my God, there's a Bitcoin ETF out. Let's all go. It doesn't work like that. It's a relationship business built over time. And this is, all across the United States. It's not New York City in a dealing room. It's a very different world out there. So that's why it takes time. It's the same with any of the institutions who might be thinking about it. Some fund manager who thinks I can sneak it into my portfolio now and not tell my risk manager that I've got crypto. I'll just sneak it in as an equity and hope they don't find out. Same with hedge funds. So that's all to come. And that's why there tends to be this gap. So that's how I'm thinking about it right now with the new participants in the election. And you are going to lose minds. Many countries around the world, not just the United States, have elections coming up, and AI will play a part. Nothing you see online, nothing you hear, nothing you read, and people you talk to online, none of them may be real. And it may look like it's me talking to you, but it's probably the AI, unless it's on an authentic channel like my Twitter feed, or elsewhere, like the Real Vision platform, behind the paywall, the Real Vision video channel. If you find clips of me online saying crazy shit, which is I do say a lot, don't trust it. Don't trust anything you see, and you will lose your mind. You'll hate your neighbors, you'll hate your brother, you'll hate your sister, your wife won't talk to you, all because of the anger and resentment this election is going to bring about. So anyway, I keep warning you about that. The outcome will be digital identity. And the outcome will be, my guess is that tech companies are going to get sued by the government like the banks did after 2008. Those of you who don't invest in the racy end, which I cannot understand why you would take a suboptimal bet, and even on a risk-adjusted basis, technology and crypto, risk-adjusted versus anything, are the best investments on earth. In fact, I wrote about that in Global Macro Investor this month, trying to explain to people, you think you've got a lower volatility bet, but your rewards are commensurately lower. In fact, even lower than they should be versus the crypto macro setup. Gonna see volatility. And I've always reminded you guys in the do not fuck it up mantra, part of that is expect 30, 35% pullbacks. Could be less, but just expect them. And that often happens when you get to this kind of 61.8% Fibonacci level in the first leg of the bull run. It often corrects sharply,